Hiya traders, I'm running a series now on how to trade US stocks using CFDs and via spread betting if you're in the UK, and this is the second in the series, and today I'm going to talk you through a couple of trades that I took on Facebook. Now I'm going to talk you through the trades and I'm going to show you how once you've learned how to trade, once you've learned the principles of successful trading, which primarily have the right mathematical equation between reward, risk and fees that you pay your broker, have that mathematical equation correct, and then understand how markets move, understand the dynamics between supply and demand, between buying and selling, and understand how to analyze charts through technical analysis. So I'm going to talk you through the basic technical analysis that I used on this Facebook chart behind me to assess the market and determine that I was going to go short at the right place, getting the right risk and determining the right profit reward for my trades. So I'm going to talk you through those trades now. So here's the chart for Facebook. This is the 14th of November 2019, and this is the morning session on Facebook. And so just taking you through what we've got on the screen here. CFDs provide you with a sell price and a buy price. You can see that the difference between the two is just 6 cents. And for a stock like Facebook, where most of the moves in Facebook you'd be looking at being a decent move being $1, 6 cents is a reasonable commission, if you like, to pay. There are no other fees in this type of CFDs, and if you're in the UK and you're trading CFDs and you make a profit and it's in a spread betting account, then it's tax-free profit. So these CFDs have advantages over buying and selling ordinary single company shares from that perspective, and you have no problem shorting. Obviously a stock like Facebook, you'd normally have a good supply of shares there anyway to short, and so basically you wait for I wait for a pattern to emerge that I recognize with my what I understand about the way markets move and my interpretation of technical analysis. I'll wait for a pattern to emerge and then I'll pounce and I'll take a trade and I'll go long or I'll go short. Okay, so in the morning session in Facebook, I'm trading the standard Facebook CFD. These are options here, forget about those. Don't bother trading those, but this is the ordinary Facebook share, and so that's selling and that's buying CFDs, and it's currently down here, just come out of a couple of trades at 192.50. the price, the mid price is 192.50 or thereabouts, just gone under there now. And so basically in the morning, early morning, Facebook went up, and then at the top here you can see these two candlesticks here, almost identical in size, a green one followed by a big red bar. That's a 2-bar reversal candlestick pattern, and often signals that when you get a big green bar followed by a big red bar, often signals the end of a trend. Not always, as with anything in shares, not always, but very often it can do. It's the end of, it's a sort of extreme move followed by the buyers that all bought in here and here selling off, and they continue to sell off down here. and so the sell-off began at this stage. Am I looking for shorts at this stage here? No, because I want to see which way the market's trending. This is an uptrend, high, higher high, and this is a big down move with a lower low, but there's been no lower high at this stage, so I'm waiting for a lower high, which you got here, followed by a lower low, and the lower high is only confirmed when there is a lower low. So at this level here, anything below there, you've got your lower high and you've got a lower low, so here. So at this stage I'm on the lookout for shorts, and I'm not going short here because this is a prime spot for the buyers to come in and just force the market up. I wait for the market to go up to this level here, and then I'm waiting for candlestick patterns. So I'm waiting for the market to go up and then produce weakness. And so what we got in this set of candles here is we got a high. This is the high of these set of candles here. Market came down, up, and that's a lower high with a reversal candlestick pattern in there as well. And so on the close of this bar here, I go short. And so this is at 193.20. okay, and with my stop up here at 193.51 as it was, 193.50 or 51, put it at 51. I've got a 30-cent stop there, so I'm looking for 30 cents plus on the move. So market comes down, smaller candlesticks now. This is a big red one, followed by smaller candlesticks, and here we are dipping under the 193 level, and I needed under the 193 level in order to take my profit. So I'm still in the trade, and then we get a pin bar here, nice pin bar bouncing off the 8 exponential moving average, and the market quickly comes down for me to take my profit around about here. So 40 cents on that one, and good risk and reward, and nice quick trade. The market then comes up, big green bar, but this here is a range bar. This is a green trend bar, but this is a range bar, and it's followed by very small, 2 very small bars. These are doji candlestick bars. There's a tail at the top and there's a nose, if you like, at the bottom of the candlesticks with very small bodies. This is a double doji candlestick pattern. I'll pounce on candlestick patterns like that, and I'm short just under this second doji candlestick, and that trade lasted 1 minute because the market shot down, and with a very tight stop just above these highs, the high of the dojis here, I'm short, and I got a just about a 2-to-1 reward to my risk on that particular candlestick pattern within 1.5 minutes, and I exited just at the 192.50 level. So all in all, 2 quick trades within, within half an hour in the downtrend on the 1 minute chart of Facebook. I'm using exactly the same tactics that I used to trade indices and that I used to trade Forex, and with a good commission structure, good commission, which the percentage of commission that I'm paying to profit is low. And if this is 192 and this is 193, then that's a $1 commission, and it's not worth looking at. Even if it's 30 or 40 cents, it's probably not worth looking at, because the chances of a move of that length, based on the technical interpretation that I use, it's not accurate enough, and the percentage of commission's too high, and therefore in the long run, even though I can judge the market direction and I may get it right, but the commission's too high and I'll end up losing money in the long run. So the commission structure that I pay my broker has to be right. And with this type of share, when it's moving quickly and the commission structure is right, then it offers good risk and reward to fees ratio, and that's what I'm looking for. These markets are worth trading when they've got momentum. And if it's just moseying around, going up, going down and going sideways, then I'm not interested, I'm not trading. But when it's moving like this is a stock that is, I call, in play. It's in play because it's swinging nicely, and when this is happening and you've got a good fee structure, then I think 8-9 times out of 10 I can get the market direction correct and get a good risk and reward trade out of the market. And not every day is as good as some days I've had recently. I had 17 winners on the trot the other day, and if you're a beginner, that's going to make you feel sick listening to that, but it's possible. If it's possible for me, it's possible for you. You just need to have the right education. Get the right education at Excellence Assured, and I'd be delighted to teach you how to trade. This is the second of our episodes on trading CFDs in US stocks. My name's Anthony Beardsall, and I'll catch you on the next one. Bye for now.